Hello, John. Can you hear me?
Yep, good afternoon, Barry. Hey, what a whirlwind here at the beginning of the Trump administration. The trade wars, as they're becoming known as, are really in the news. What do you think? Are we in dangerous territory?
Absolutely. I think that he's proposed tariffs that are as high as they were in the 1930s. I think the Smoot-Hawley tariff that was passed then was the highest in U.S. history, and I think what the tariffs he's proposing are comparable to that. And I think they could potentially trigger a trade war and ultimately a depression similar to the 1930s.
Yeah, there's no winner in a trade war. I remember seeing a political cartoon a few years ago that showed two people dueling. And at the end of the duel, instead of pointing the gun at each other, they pointed it here.
That
So
seems to be the problem.
there's no winner to a trade war. And a good colleague of ours, Russell Sobel, produced a great article about 8 years ago that showed that when you introduce protectionism, trade war, you travel the road from riches to rags. I mean, lower barriers, you travel the road from rags to riches. It's the canary in the coal mine that signals which direction you're going to go, and that worries me more than an increase in prices. Although the increase in prices is only the beginning, because protectionism is great local politics. The politicians at the other end in Canada, in China, and Mexico so far, and certainly in the European Union, which President Trump has promised to hit, they would love to retaliate in favor of their best buddies in the business world.
Yeah, and I think that the most important thing that the U.S. could do now, if we're really concerned about the trade balance, is to eliminate the debt or eliminate the deficits and stabilize the debt. I think what most people don't understand is that the balance of payments has to balance. That is, the trade flows must balance with the financial flow. That's why it's called balance of payments. And of course, what's happening is China and other countries are generating trade surpluses. They use the dollars generated from their trade surplus to invest in primarily U.S. government securities. Now, there's nothing wrong with that, except that there's a fatal flaw. And you and I both know what that is. And that is that for decades now, the government has been incurring deficits and accumulating debt at an unsustainable rate. And so the only way that the U.S. can now sell government debt is at a very high interest rate. In fact, I was looking at the data recently, and the U.S. is now tied with the U.K. for the highest interest rate on government debt of the developed countries. We used to be have one of the lowest interest rates. And because of the accumulation of really unsustainable growth in debt, we now have to pay a very high interest rate to get people to hold that debt, including foreigners. And so that's the fatal flaw. And I think that if we could eliminate deficits, if we could stabilize the debt, of course, the interest rate then would come back down to a more market-oriented interest rate and comparable to what maybe we lower it to where we were back in the 1980s and 1990s. We had one of the lowest interest rates on government debt. And then if that happens, then the Chinese and foreign countries might continue to invest in U.S. securities, but they would do so not because of the distortionary interest rates. They would do so because it's a good investment. And also, I think that more capital would flow into the private market, private capital, which of course would stimulate higher rates of economic growth. So I think eliminating deficits, stabilizing debt is the single most important thing we could do now if we're really concerned about our balance of payments.
Yeah, our current federal spending and debt is unsustainable. That means it will end. And so that will end the trade deficits, which has been the current focus, not the budget deficits. And so those things will end. The problem is they'll end in a very devastating and disruptive fashion. And that's what we need to address, is find some soft landing approach to address the federal budget deficit spending and the unsustainable growth, which is driving up interest rates, which is further stymieing economic growth and further increasing the debt because of the payments on it. It's that whole combination that starts with the slowing of spending, getting the budget balanced, and then that will, as you say, the foreigners can still buy our bonds, but it'll only be because it's a good investment, not because they have money that they've got to park someplace because they're selling us way more than we're buying.
Yeah, I think we're not headed to a soft landing. I think we're headed to a crash landing, a debt crisis. And when that happens, the interest rates will really skyrocket. So, as you and I know, there is a way to solve this thing, and there is a precedent for solving it. And you and I, of course, are very supportive of the Swiss approach to this. Basically, the Swiss back in the 1980s and 1990s were experiencing the same problem. They had deficits and debt accumulation that was not sustainable. So what the Swiss did was to put in the debt brake, which essentially eliminated deficits in the long term, stabilized their debt, and they now have very low interest rates. They have a very stable financial system. They are the best financial market, capital market in the world right now. And their currency is at a premium. So we know how to do it. The Swiss and other countries have indeed done what we need to do. So it's very simple. You got to eliminate deficits, stabilize debt, and then the other distortions like trade imbalances will be solved.
Exactly. Yeah, you say it's very simple. It's obvious what to do, but we've really gotten used to having way more government than we want to pay for. And for people to adequately understand that, if they really truly want the amount of government we have, about $7 trillion, that would take about a 60% increase in the federal income tax rate to pay for that. And that's assuming that there's not any effect on the economy of all these additional taxes. So with what people call static scoring, it would take a phenomenal increase in income tax rates to pay for the current level, which is why it's unsustainable and why it will end. And as you say, a crash landing is way more likely than a soft landing. Though we here at the Institute for Objective Policy Assessment are charting both paths, a path to a reasonably managed crash landing that moves the federal government back to within its constitutional boundaries. And by that, I mean the programs that are explicitly named in the Constitution and not the ones imagined out of the Commerce Clause and the General Welfare Clause, such as education, which the Constitution doesn't mention that anywhere. But we're spending hundreds of billions of dollars a year on a federal Department of Education that, as I say, and others say, it's only marginally constitutional. And as we discussed last week, the Department of Government Efficiency, I don't think there's enough. There's a lot of waste and abuse, but there's not enough by itself, plus economic growth, to eliminate having to cut some meat, to cut some actual departments out of the federal government.
Yeah, I think that the bottom line is that countries that are successful in bringing their budget under control do so primarily by cutting spending, not by raising taxes. We have lots of experience over centuries of countries that have tried to address their balance of payments problems and their budget problems. The key is cutting spending. And the countries that have just raised taxes may get a temporary solution, but in the long run, they fail. So I think that people are quite critical of President Trump at this point, but perhaps you need to shake up the federal government. And this is, I go back to the Reagan years, and people were quite critical of Reagan for cutting spending, but one of the things they discovered is that when they cut the grants from the federal government to the states responded by saying, well, we don't want to fund these things. They aren't worth funding, or they privatized them, or they found better ways to do what they were doing with less money. So, there are lots of positive outcomes when you cut budgets and ask people to really, and ask the states to prioritize what's really important in terms of these programs. And that, I hope, is what will be the outcome of President Trump's approach here.
Yeah, some of that's going to happen one way or the other. Yeah, the crash landing is looking more and more likely and more like a real crash. Well, we'll pick it up again next week, and we'll see what the administration's up to, and see if some people are pushing back on some of these things on the firm basis on which they should push back.
Sounds good. See you.